7 ways to keep calm during a crypto bloodbath. With an asset as volatile as Bitcoin and cryptos in general, it's easy for investors to frequently fret about ever-changing prices. And with the largest digital currency slumping over the past couple of days, those concerns are even more relevant. However, some crypto market analysts believe there are fundamental and technical reasons the crypto giant can continue delivering upside. Bitcoin is in a bit of a slump, but it remains a compelling asset and one that's garnering increasing attention in the professional investment community. Pros are also casting a wide net when it comes to forecasting the cryptocurrency's price. Despite all this volatility, Bitcoin has performed plus 687.69% in 12 months. Both panic buying from the FOMO. What is FOMO? Fear of missing out. FOMO. This is a social anxiety stemming from the belief that others might be having fun while the person experiencing the anxiety is not present. It is characterized by a desire to stay continually connected with what others are doing. Reason most crypto investors buy at higher prices, and the panic selling which we have currently are due to FUD usually, which leads to disastrous results. Your money doesn't lose your money, your mind does. What is FUD? Fear, uncertainty, and doubt, often shortened to FUD, is a propaganda tactic used in sales, marketing, public relations, politics, polling and cults. FUD is generally a strategy to influence perception by disseminating negative and dubious or false information and a manifestation of the appeal to fear. How you can stay calm in a moment like this. Number 1. Look away. Bitcoin's volatility is part of what makes it irresistible, said William Ketz, associate professor at the University of Oxford's Department of Economics. Don't fall into the trap. Checking the value of cryptocurrencies constantly is unproductive. Number 2. Buy to hold. When people buy and sell in a dizzy cycle, they miss the bigger cryptocurrencies picture and the blockchain technology on which they are traded. There's no question that digital currencies are the future. You should be prepared to own it for years. Number 3. Diversify beyond Bitcoin. Fortunately, you don't have to have only Bitcoin. There are currently some 2,000 cryptocurrencies to choose from. I have made a video of my best 10 recommended altcoins to own. Number 4. Invest only what you can afford to lose. Number 5. Stake or invest your cryptos and continue to earn passive income irrespective of the short-term price volatility. Check my crypto investment videos. Number 6. Buy the deep. These deeps are buying opportunities. Number 7. Continue to dollar cost averaging. This means you continue to buy on way down if it deeps further. In summary, stay calm and hold.
They're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar.
That was Fed Chair Jay Powell earlier this week, warning of the risks associated with cryptocurrencies. Bitcoin down about 10% this week after surging over the past year. Joining us now is Brian Brooks, former active controller of the currency. You saw my expression there, Brian. That's very perplexing to me, and I'll tell you why. Okay, I will give him the first statement that it's highly volatile, and at this point, it's tough to use for transactions. But then he says it's not really a store of value, and then says it's essentially a substitute for gold. So the 4,000, 5,000 year store of value that we know historically is gold. And he just said it's like gold, but it's not a store of value. So does he not think gold is a store of value? And with what the Fed's doing right now, is $1, is he really making the case that that's a store of value?
Well, hey, Joe, you're thinking about it exactly the right way. I mean, there's a lot to unpack there. So first of all, as a store of value, I would just say there's a reason people have flocked to Bitcoin in the last year, right? Which is something else happened in the last year, and that is that we increased the money supply by 40%. So when you do that in a world of supply and demand, it means that the dollar is at least a 40% less good store of value than it was a year ago, and that is one of the reasons people look to Bitcoin. But Joe, the point I really want to make is the dollar may not actually be backed by anything. Obviously, we went off the gold standard in the Nixon administration, but cryptocurrencies actually are backed by something. They're backed by underlying networks, and what you're buying when you buy a crypto token, whether it's Bitcoin or anything else, is you're buying a piece of a financial network that's being built to transact all kinds of stuff. And the number of things that have gone on chain in the last 2 years is enormously high. That's why the cryptocurrency market today is almost a $2 trillion market. I believe in the wisdom of crowds personally, and I think that there's kind of like forces of the future at work here and then forces of the status quo. I think the crowds are telling you that these networks are where finance is going in the future. I want to be part of that.
There's